Hey everyone, and welcome to your personalized deep dive, all about reaching financial freedom. I know you're ready to boost your finances, so we're going to take a close look at everything you sent us and try to pull out those golden nuggets to help you reach your goals. We're going to cover a lot of ground, from really understanding where your finances stand right now to budgeting emergency funds, tackling that debt investing, and even finding ways to increase your income. Get ready, because I think this is going to be a game changer for you. One thing that really jumped out at me from your materials was that 50-30-20 budget rule. It seems like a really easy system to follow, but I'm curious to see how it works in the real world.
Yeah, that's a great place to start. The 50-30-20 rule can be really effective, but it's not just about following those percentages. It's more about understanding the ideas behind it and then adapting them to fit your own situation.
Okay, so let's break that down a little before we even get to budgeting. I think it's really important to understand where you are financially. You've given us some information on your income and expenses, and I noticed a few subscriptions that you might not even be using anymore.
Oh, yeah, you're totally right. A lot of people skip over this step of understanding their finances, but it's like heading out on a road trip without a map. You need to know where you're starting from to plan the best route.
Exactly. So how can someone keep track of their spending without it being too overwhelming? I mean, nobody wants to spend hours categorizing every dollar they spend, right?
Well, luckily, there are so many tools that can make tracking super easy nowadays. Like budgeting apps can connect directly to your bank accounts and organize your transactions for you. Or spreadsheets can be a more hands-on way to do it. And if you like keeping things simple, you can even use a pen and paper. The key is to find a system that fits into your life and then stick with it.
I hear that a lot. Consistency is key.
Mhm.
But just tracking where you spend your money isn't going to magically solve everything, right? We need a plan, which brings us back to that 50-30-20 rule.
Right. And the beauty of the 50-30-20 rule is that it's really simple.
Yeah.
So the idea is to use 50% of your income after taxes for your needs, like things like your housing, groceries, utilities, transportation, the basics.
Okay, that makes sense. Those are non-negotiables for most people. What about the other 50%?
That's where things get fun. So 30% is for your wants, all those things that bring you joy, like eating out, entertainment hobbies, travel, all that good stuff.
So it's not about cutting yourself off entirely. It's more about being mindful about how you're spending so you can still enjoy yourself.
Exactly. And that last 20% is really important. That's all for your savings and paying off any debts. That's how you build your financial security, reach your future goals, and get rid of any debt you might have.
I can see how this gives you a really clear structure to work with. But how can we use this for your specific situation? Looking at your income and expenses, it seems like you could maybe adjust that wants category down to 25%, to really speed up your savings goals, especially since you want to buy a house in the near future.
That's a great observation. And that's what makes the 50-30-20 rule so powerful. It's not a set in stone formula, it's a starting point that you can adjust based on what matters most to you.
So it's all about finding the right balance. But even if you have a perfect budget, it's useless if you don't actually follow it. What are some tips for staying on track?
Well, it's super important to review your budget regularly, like try to check in on it once a month. And don't be afraid to make adjustments as you need to. Life changes all the time, and your budget should be flexible enough to change with it.
It's like having a financial roadmap guiding you toward where you want to go.
Yeah.
But what happens when you hit those unexpected detours, like that car repair you mentioned or a surprise medical bill? Those things can really mess up your plans.
Right, and that's why it's so important to have a solid emergency fund. It's like a financial safety net protecting you from unexpected costs, so you don't have to go into debt when life throws you a curveball.
I've always had trouble building an emergency fund. It just seems like such a big task. Where do you even begin?
Well, the key is to start small and be consistent. Even setting aside $50 or $100 a month can make a difference over time. I saw in your materials that you said you wanted to build a 3-month emergency fund. So let's try to break that down into smaller steps.
Okay, let's do it.
Based on your current monthly expenses, a 3-month emergency fund would be about amount calculated from listeners' information. To reach that goal within a year, you'd need to save amount per month calculated from listeners' information every month. Now, that might seem like a lot right now, but remember that even saving half of that is a huge step in the right direction.
That's a really good way to think about it. Instead of focusing on that big number, we can just focus on making progress each month. And even small amounts add up over time.
Exactly. And you can even automate the process to make it even easier. Set up an automatic transfer from your checking account to a separate savings account every month. And then you can just watch your emergency fund grow without having to think about it.
That's a really good tip. It's like paying your future self first to give you some peace of mind. But we can't ignore the big thing that's on everyone's mind, debt. It's something a lot of people deal with, including you.
You're right, debt can feel really overwhelming. But it's important to remember that you can manage it if you have the right strategies. And the first step is figuring out what kinds of debt you have, and then deciding which ones you need to tackle first.
I saw that you mentioned having some credit card debt. And from what I read, high interest debt, like that should be your top priority, right?
Absolutely, high interest debt can grow really fast,
Mm.
and it can make it harder to get ahead. Those interest rates can eat away at your finances and make you feel like you're just running in place.
So how do we get rid of this monster? You mentioned two methods, the snowball and the avalanche. Could you explain the difference between those?
Sure. So the snowball method focuses on paying off your smallest debts first, no matter what the interest rates are. It's all about building momentum and staying motivated. As you pay off each small debt, it gives you a little boost to keep going.
I can see how that would be really satisfying, crossing those debts off your list one by one.
Yeah, exactly. Then there's the avalanche method, which is all about paying off the debts with the highest interest rates first, so you end up saving the most money in the long run. It's a smarter approach financially.
So it comes down to choosing the method that works best for you and your financial goals. Whether it's the motivation from the snowball or the efficiency of the avalanche, the important thing is to have a plan and follow through.
Absolutely. Consistency is key here. And remember, every payment you make is a step closer to being debt-free.
So we've laid the groundwork understanding your current finances, setting up a budget, building an emergency fund, and coming up with a plan to tackle that debt. But financial freedom isn't just about being debt-free and having a safety net, right? It's also about growing your wealth. And that means we need to talk about investing.
You're exactly right. Investing is a crucial part of building long-term wealth and securing your financial future.
I've always found the world of investing a little intimidating. Stocks, bonds, mutual funds, retirement accounts. It's just a lot to take in. Where do we even start?
It's true, investing can feel overwhelming at first, but the key is to educate yourself and take it one step at a time. You mentioned in your materials that you have a 401k through your work, but you weren't sure how it worked or if you were contributing enough.
Yeah, that's definitely something I want to look into more.
Okay, well, a 401k is a retirement savings plan offered by employers, and it can be a really powerful way to build wealth. You contribute pre-tax dollars, which can lower your taxes now, and your money grows tax-deferred until you retire. Plus, many employers offer matching contributions, which is basically free money.
Wow, free money. I like the sound of that. But what about other investing options? I've heard a lot about stocks, bonds, and real estate.
Those are all great options to consider. And they each have their own pros and cons. Stocks represent ownership in a company, and they have the potential to grow a lot, but they can also be riskier. Bonds are like loans to governments or corporations, and they tend to be less risky than stocks.
And real estate can give you steady income through rentals. Plus, it has the potential to go up in value over time.
You got it. But it's really important to remember that there's no one right way to invest. The best strategy for you depends on your goals, how much risk you're comfortable with, and how long you plan to invest.
So how do you figure out the right strategy for you?
There are some amazing resources online and in libraries to help you get started. And if you feel lost, you can always talk to a financial advisor. They can help you figure out your situation, understand your options, and create a plan that works for your needs and goals.
It's like having a personal trainer for your finances to guide you and keep you on track. But what about those of us who feel like we're already stretched thin financially? How can we even think about saving and investing when we're struggling to just make ends meet?
That's a great question. And it brings us to our next topic, increasing your income. Sometimes, to improve your finances, you have to look beyond budgeting and find ways to make more money.
So it's not just about managing what you have, but also about finding ways to earn more. I like that way of thinking.
Exactly. And the good news is there are so many opportunities to make more money these days. The gig economy has exploded with flexible side hustles and freelance work. And you might even be able to get a promotion or a raise at your current job.
So it's all about being proactive and exploring what's out there. Making more money means you have more to save, invest, and pay off debt faster.
Exactly. And we'll dive into some specific strategies for making more money in the next part of our deep dive.
This has all been incredibly helpful. It feels like we're really laying a solid foundation for your financial future. We've covered so much: understanding your finances, budgeting emergency funds, dealing with debt, and even exploring the world of investing.
And we've even touched on the importance of making more money, which we'll dig into more next time.
It's clear that being financially well is a journey with many parts, and every step we take gets us closer to the big picture.
Absolutely. And I think the most important thing to remember from everything we've talked about today is that you have the power to shape your own financial future. With the right knowledge strategies and a little effort, you can reach your goals and create a life full of abundance and freedom.
I love that. It's empowering to know that you're in control of your financial journey. And this is just the beginning. In the next part of our deep dive, we'll go even deeper into those strategies for boosting your income. We'll look at some real-life examples and answer any questions you might have.
We'll also talk about some mindset shifts that can help you have a more positive and powerful relationship with money.
I'm looking forward to it. Until then, take some time to think about what really resonated with you today. What are you inspired to do? What questions do you have?
We'll be back soon to continue this exciting journey towards financial freedom.
Welcome back. It's great to continue this deep dive with you. Last time, we covered a lot from understanding your financial picture to setting up a budget, dealing with debt, and even dipping our toes into investing. But one thing that keeps coming up for me is how personal this journey really is. It's like we're creating a custom map to your financial freedom.
I love that analogy. There really is no one-size-fits-all when it comes to finances. Your goals, how much risk you're comfortable with, even your personality. It all plays a part in finding the best path for you.
Exactly. So let's actually put these ideas into action. You mentioned you want to buy a house in a few years, and you've also been putting money into your 401k. So let's talk about how those two goals can work together.
Sounds good. Saving for a down payment while also investing for retirement can feel like a lot to handle, but it definitely is possible. Remember how we talked about the power of compound interest? The sooner you start investing, even with small amounts, the more time your money has to grow.
Okay, so even though the house is a more immediate goal, keeping up with the 401k is crucial for the long term. But if I'm being honest, the whole compound interest thing still feels a bit like magic to me. Could you maybe explain that in a way that makes sense for someone who's not a math whiz?
Of course. So imagine you invest $100 today and it earns a 5% return. Next year, you'll have $105. But here's the cool part. The year after that, you're not just earning 5% on that original $100. You're earning 5% on the $105. So basically, you're earning interest on your interest.
So it's kind of like a snowball effect, but with money. And the longer that snowball rolls, the bigger it gets.
Exactly. And to make this even more real, I found something interesting in your materials. Remember that article about stock market returns? It mentioned that over the past century, the average yearly return for the S&P 500 has been around 10%.
10%. Wow, it's a lot.
It is. Now imagine investing consistently in a low-cost index fund that follows the S&P 500. Even if you contribute small amounts regularly over time, it can grow into a really big nest egg. It's like planting a seed and watching it grow into a giant tree.
Okay, that definitely makes compound interest a lot clearer. But switching gears a bit, let's talk about those strategies for making more money. You mentioned exploring side hustles. What have you found to be especially profitable or fun?
Well, based on your interests and skills, I notice you said you love photography. Have you thought about offering freelance photography services? Maybe for events or portraits?
Hmm, that's an interesting thought. I actually did some photography on the side back in college. Might be fun to start doing that again.
See, and that's the great thing about side hustles. You can use skills and passions you already have. Not only can it bring in extra cash, but it can also be fulfilling and creative.
And it doesn't have to be just freelancing, right? There's the whole world of online business, too. Creating digital products, online courses, even starting a blog or a YouTube channel about something you're passionate about.
You're getting it. The options are endless. And the internet has really made it easier for anyone to become an entrepreneur.
It's exciting to think about all the different ways to make more money, but I know some people might be hesitant to take on a side hustle. Maybe they're worried about not having enough time or not knowing where to begin.
Yeah, I get that those are valid concerns. The key is to find something you truly enjoy and that fits into your life. It shouldn't feel like a chore. It should feel like an opportunity to grow and try new things.
So if you're passionate about something, it's more likely to work out even if you're busy.
Definitely. And remember, you don't have to jump into something super complicated right away. Start small and gradually do more as you get more experience and confidence.
Okay, so we've talked about maximizing long-term investments while still saving for short-term goals. And we've explored ways to boost your income. But let's get back to that house you're hoping to buy. What are some things you can do right now to make that dream a reality?
It's great that you've already started saving. But let's fine-tune that strategy a bit. Based on how much you're saving now and how much you'll need for a down payment, it looks like you're on track to reach your goal in about 4 years.
4 years, that's not bad. But I'm all for speeding things up if possible.
I thought you might say that. Remember those subscriptions we talked about that you're not really using? If you put that money towards your down payment savings instead, you could probably reach your goal a few months earlier.
That's a good idea. It's crazy how those little recurring expenses can add up without us even noticing.
Exactly. And have you thought about setting up automatic transfers to your savings account, specifically for your down payment? That way you're consistently saving without having to think about it every month.
That's a great tip. It takes the guesswork out of it and makes saving feel a lot easier. But what about actually finding the right house? That can be pretty overwhelming too.
It can be, but remember, knowledge is power. Start by researching neighborhoods that fit your lifestyle and budget. Check out online listings, go to open houses, and find a real estate agent who can help you through the process.
It's like a treasure hunt, but instead of gold, we're looking for the perfect home. But I worry about getting caught up in the excitement and spending more than I should.
I understand that's a valid concern. It's super important to set a realistic budget for your house and stick to it. Remember, owning a home comes with other costs besides your mortgage payment. Things like property taxes, insurance, and maintenance.
So you have to factor in all the costs, not just the monthly payment. This is where having a clear financial plan is so important.
Absolutely. It's like having a compass to guide your decisions. And make sure you're making choices that are good for your long-term financial well-being.
I love that analogy. We've covered a lot in this part of the deep dive. Fine-tuning your investment strategies, exploring side hustles, and figuring out concrete steps to buying a house. It feels like we're really making progress.
We are. And in the final part of our deep dive, we're going to focus on the mental side of finances. We'll talk about mindset shifts that can help you make confident decisions, overcome any limiting beliefs, and have a healthy relationship with money.
That sounds really interesting. I truly believe our mindset plays a huge role in reaching our goals, and that's especially true with finances.
You're right. And remember, this journey is about more than just numbers. It's about creating a life filled with abundance, freedom, and fulfillment.
I love that. So until next time, keep brainstorming those side hustle ideas, keep saving for that dream home, and most importantly, start picturing yourself living that financially free life you want. Welcome back to our final part of this deep dive into your personal path to financial freedom. We've gone over so many practical strategies, from budgeting and investing to boosting your income and even making that dream of owning a home a reality. But as we wrap things up today, I want to shift gears a bit and talk about something that's just as important, and that's the mental game of money.
That's a great point. Our mindset and how we view money can have a big impact on our financial choices and ultimately on whether or not we achieve our goal.
Exactly. And I know from experience that sometimes it's not just about knowing what to do, it's about overcoming those little voices in our heads that try to hold us back.
Mm.
You mentioned limiting beliefs. What are some of the most common ones people have about money?
Well, one that I hear a lot is, I'm just not good with money. And this often comes from past experiences or just not having enough education about finances, which can lead to feeling helpless or even afraid.
I can totally relate to that. I used to think budgeting was only for people who were super organized and that I was just destined to be financially messy forever. But then I realized it's not about being perfect. It's about finding a system that works for you and strengthening those money management muscles over time.
That's exactly it. It's about changing from a fixed mindset to a growth mindset, believing that you can learn and get better with money. Another common one is, money is the root of all evil.
Oh yeah, that's a tough one. I think that belief can make people feel guilty or ashamed for wanting to be financially secure.
You're right, it can create a subconscious block that stops them from going after opportunities, or even enjoying the wealth they already have. But money itself isn't good or bad. It's just a tool. It can be used for good things or bad things. It's our relationship with money and the choices we make that really matter.
So it's about changing our perspective and seeing money as something that can help us live better lives, support causes we care about, and make a positive difference in the world.
Exactly. And one more limiting belief I see often is, I'll never be rich. This can come from comparing ourselves to others, focusing on what we don't have instead of being grateful for what we do have.
Comparison really is the thief of joy. It's so easy to get caught up in everyone's highlight reels on social media and start feeling like we're falling behind. But everyone's journey is different, and comparing ourselves to others only holds us back.
That's so true. It's important to figure out what wealth means to you. It's not just about how much money you have in the bank. It's about feeling secure, having choices, and living a life that aligns with your values.
So it's about financial freedom on your own terms. So how can we start changing these limiting beliefs and cultivate a more positive attitude towards money?
One powerful practice is gratitude. Take some time every day to appreciate what you have, even the small things. This helps you shift your focus from scarcity to abundance and opens you up to receiving more.
I love that it's like training your mind to see the good things instead of focusing on what's missing. Are there any other strategies we can try?
Surround yourself with positive influences. Look for mentors, books, podcasts like this one that inspire you and give you practical advice. And when you notice negative thoughts, challenge them. Instead of saying, I'll never be able to afford that, try saying, what steps can I take to make that happen?
So it's about changing the narrative and focusing on finding solutions instead of dwelling on the problems. And remember, personal growth is a journey, not a destination. There will be good times and bad times. But the important thing is to keep learning, keep practicing, and keep believing in your ability to create the financial future you want.
You said that perfectly. Financial freedom is within your grasp, and by combining practical strategies with a positive, empowered mindset, you can create a life full of abundance and purpose.
This whole deep dive has been incredible. We've covered so much, and I'm feeling really inspired to take action. Remember, you are capable of amazing things. Start small, be consistent, and never stop learning and growing.
And most importantly, remember to enjoy the journey. Celebrate your wins, learn from your setbacks, and keep moving forward with confidence and joy.
Thank you so much for joining us on this deep dive into your financial freedom. We hope you've gained some valuable insights and tools to empower you on your path to abundance. Until next time, keep diving deep.